Hello and welcome to this new panel discussion. And this one, we're moving away from macroeconomy, stability, the role of the military in the economy, and reforms to a more provocatively titled conversation, which Kalsoom and I, she was a partner in crime in coming up with this. And I was like, let's make it a bit provocative. It's called, Is Pakistan Investable Amidst a Polycrisis? And as you heard in the morning, the ambassador does not think we're in a polycrisis. I disagree. My recent interview to the diplomat frames it as it being a polycrisis. There are others who I think agree with me. But I think the reason why we decided to frame this conversation in a more blunt way is primarily because all three people here present as panelists, and I'll introduce them very quickly in just a moment, do and continue to invest and believe in the Pakistani market and its opportunities. So clearly the answer from their point of view is yes, and we'll get to why in just a moment. And I will also ask them why they hate their own sleep so much by being active investors or participants in the Pakistani economy. But before we move on, very quickly, joining us is Kalsoom Lakhani. She's co-founder and general partner at I2I Ventures. Farooq Tirmizi could not join us today due to some personal reasons, so we'll miss his insights. Amjad Ahmad is chairman empowerME at the Atlantic Council and also general partner at 500 Global. And we have Abbas Shahid, who's vice president of growth at Bykea, so a startup that has grown tremendously and given its presence in the Pakistani market in many ways, I would argue has some of the high frequency data, as we love to call it, about the state of the Pakistani economy in terms of mobility, movement, miles, how people are doing. As we go through this conversation, I would also encourage you to continue sending questions on askac.org. My iPad is right here. I will ask questions. But let's begin first with you, Kalsoom. Give us an overarching state of the startup technology ecosystem in Pakistan. Where are we? What is the outlook? And more importantly, how have entrepreneurs adjusted to life amidst a polycrisis?
Yeah, I feel like Abbas can speak to that as well. How many people here are familiar with the Pakistan startup ecosystem? Like a few hands, cool. So I want to just give you guys a little bit of a sense of what has been happening in the market the last few years to give you a sense of how we're doing relative to that. So just to give you guys a sense, in 2019, Pakistani startups raised about $49 million in funding, right? 2020, $65 million in funding. 2021 and 2022, it was $350 million and $355 million respectively. So from one year to the next, from 2020 to 2021, it was 5.5x. That was something that happened, I'm sure Amjad can speak to this, across emerging markets. We saw a huge amount of, interest rates were down, liquidity was up. We just saw a lot of outside investors, international venture capital funds, able to deploy a lot of money very fast. We saw term sheets given to startups in like 2 days. As an investor, that was kind of crazy being on, being in a lot of those deals, and it was really also kind of an interesting time as well. We saw huge rounds happen with companies like Airlift, Bazaar, Abbas. We also saw companies close down like Airlift happen all during that time. And so as the polycrisis, and I also agree with Uzair that it is very much, there is a polycrisis happening, but also with just global macroeconomic factors, the war in Ukraine, everything that's happening in the world, we started to see dry-ups happen in other markets, right? So including in Pakistan. And so I think what's really important for people that we're looking at Pakistan, we're really excited about the $350 million raise, $355 million raise, to now when we look at what it is year to date, it is $35.5 million raised year to date, right? Which is literally 10% of what happened of all of last year, and we're in the last quarter of 2023. So we are literally hitting a fraction of what we did before. And I think what's really important for people to understand is the last 2 years were a bit of outlier years. I think a lot of people wanted to point to those years as this is going to be the trend of what's happening for the future of Pakistan. We're always going to hit these, many figure amounts of what we raise. Pakistan is going through a massive crisis right now, and that is impacting people outside of Pakistan and where they want to put their dollars, right? We can always argue that Pakistan has had a perception challenge for all of time. And so right now, given the risk associated with the market, a lot of people are holding back from most emerging markets. Egypt is another market that's quite similar right now. But in Pakistan, we're seeing that happen as well. And from a push-pull perspective, we're seeing a lot of really amazing startups like Bykea, not necessarily going to the market to raise right now, right? Because why would you raise when there isn't a lot of capital out there to raise from, and or you aren't raising with a lot of good terms on the table? And so I think you're seeing kind of the push-pull effect of not a lot of supply out there in terms of capital, and then also from a pull effect, and not a lot of really good founders going out to raise. So from a pipeline perspective, it's a little dry right now. So I think things seem a bit dire when you look at the numbers, but I think there are a lot of explanations and reasons behind it. And I know we're going to get into that also about how founders are behaving in this time. And I think Abbas can speak to that as well in terms of how companies are I guess, positioning themselves in this current environment in really cool and interesting ways that you should feel really positive about looking at the ecosystem right now.
Thanks for that overview, Kalsoom. And maybe, Abbas, I'll bring you in first into this conversation. I remember years ago, to use the often what we're guilty of as analysts, the taxi driver view of Pakistan. And to me, the taxi driver view was a Kareem captain view of Pakistan, was that you had this boom in mobility and mobility-based startups, starting with Kareem and then its acquisition with Uber, and Bykea and others came in, of people who realized that moving people around was not only a great way to run a business as a startup, but also a great job to have, especially in a country where you often hear high youth unemployment, people with masters, et cetera. But now that there's a downturn, and we have data, for example, coming out, 40%, 30% year-on-year decline in petroleum consumption. Some say a large chunk of that is due to smuggling of Iranian oil into the market, which is a separate topic. But what are you seeing in terms of trends at Bykea, and how is Bykea adjusting to this new reality of Pakistan over the last couple of years, where there has been, as Ali Asnan said earlier, price shock after price shock over the last 24 months?
So I think before I jump into the Bykea context of it, and Kalsoom's set the context very well, just one thing I'd like to add is if you go a little bit further back, right, pre-2019, 2018, if you go back to 2014 and 15s, there was very little capital in the market, right? So the concept of consumer startups becoming big, service agencies have existed for a little while, but the concept of tech consumer startups becoming big was completely alien at the time. So if you were starting something off in the consumer space, you were seen as kind of crazy because there was no precedence of raising funds, especially from large investors. And then as you move a little, so one thing I want to point out there is that a lot of the founders that came in and raised capital in the 2019, 2021 boom were first-time founders, right? And that sort of explains a lot of things that went on, and most mature markets have gone through that. Like US went through that in 2000, 2001 as well. Later on, post the 2008 crisis. So it's seen a few cycles of sort of course correction within the tech space. This was the first one for the tech space in Pakistan because tech space as we know it today didn't exist in 2008, right? And within that context, Bykea started in 2016, 2015 era time. And what we saw at that point was multiples being raised, which were a lot more what we now like to call realistic, between 7 and 10. And then we see, so I remember in 2020, when we raised our last external round, we had raised a capital of $13 million, which was in the history of Pakistan the largest that a tech consumer startup had raised, which in the global scale of things seems minuscule, right? And then suddenly you see 6 months down the lane, companies raising on multiples of 30, 70, 60, right? Which even to us, that 6 month span seemed very, very crazy. So I think we sort of lucked out inadvertently to sort of raise capital before that time frame, sort of with realistic expectations, and sort of that sense of frugality that existed within our team to sort of drive that with less money, high competition. What we see now is a bit of a weird scenario, right? As Pakistan goes more and more into economic crisis or tries to come out of it, it sort of works both ways. There are people who are looking for gig economy and trying to enter that industry to sort of supplement their income. One income is increasingly being seen as not enough, not just in Pakistan, across the world, but more so in Pakistan. So we see that a little bit, but we also see the struggle for both startups and people operating and using those startups for their own earnings or for mobility, right? So one example that I can give in terms of mobility is we saw a lot of people, like the movement overall, between all, forget Bykea, between all mobility and logistics players has shrunk, right? You see Kareem sort of shrink a little bit. You see Uber exiting 7 out of the 8 markets that they were operating in, right? So that's a big indicator of where the market lies and how the market operates. But at the same time, you see the biggest, one of the biggest Russian companies, one of the biggest global companies, Yandex, come into Pakistan. At the same time, you see InDrive come into Pakistan. So it's not all gloom, right? You see a lot of startups now focus on unit economics a lot more, which is a sign of that startup ecosystem maturing. And like Kalsoom said, there is still some funding there, right? It's just a very different criteria for that funding. So I think in terms of not just mobility, but overall, yes, people are feeling the pinch. Yes, people are moving less. But in a country like Pakistan, where remote work is not as common as the Western parts of the world, people have to move, right? It's not something that you can let go of, right? And more so now because people are trying to find multiple things to do to sort of supplement their income. So it's a weird place where the economy, where the people are sort of still trying to make sense of it and do what they do, but the capital is obviously a lot less, the opportunities are lesser, and therefore it is requiring a lot more innovation in a frugal market to sort of drive that economy.
Can I add something about what Abbas said? Because for people that don't know about Bykea, in terms of it being a homegrown, real success story, but also the fact that the $13 million that these guys raised in 2020, that was their Series B round, which in 2020 and 2021, that was like the average seed round that Pakistani startups were raising, right? And I think that speaks to the fact that you guys were able to, I think that actually is like a really good Series B round in terms of what a company can do with that amount of money. And I think it also speaks to the fact that there was a lot of inflated numbers of people raising a ton of money and then burning through a lot of money. And so I think to the example of the Bykea example, to me, is really a great example of raising a sizable round, maybe relative at the time, it seemed relatively small, but now being able to see how long you can stretch it, especially if you focus on the right things.
Yeah. No, thanks for that. And Amjad, I'll bring you into the conversation here. Maybe zoom out a bit into the region, because you look at, through the Atlantic Council lens as well as 500. What's going on in the region? And of course, even here in the United States, the term changed post-pandemic, right? The boom happened, and then the conversation was grow with discipline, frugality with innovation, as Abbas said it. So what are some trends you're looking out for or looking at in the region? And what are some things you're observing in the Pakistani market as well that perhaps folks within the country, either from a policy point of view or startup point of view, can learn from in terms of what you're seeing in the region as well?
It's an easy question, thank you. So look, I think let's start with the externality. There's something that has happened in the venture industry as a whole, globally, that impacted all of our markets, whether you were in the US, Saudi, Pakistan, anywhere, which is liquidity has been sucked out, right? Now we have interest rates of 5%. There are a lot of other asset classes where you can put your money and have a return. So what you saw was a retrenchment of capital from emerging markets, right? And that's happened across the board. So it's not specific to Pakistan or any of our markets in the region. So that's one. And I don't think we're going to return to 21, 22. That was a very historic, unique period where capital was zero and everyone was looking for opportunities everywhere. I think we're normalizing probably to the 20-year average at this stage. So that's sort of outside of any of our markets. It's just the industry itself. Coming to the region, you really cannot paint it with a broad brush. You have two markets, Saudi and the UAE, that are being propped up effectively by government. They have tremendous capital. They're deploying that capital. To give them a lot of credit, they've recognized that entrepreneurship is a great lever in the economy to diversify, to grow. And that's really what's changed the game. I mean, I appreciate the fact that you said 2015, because it's the same thing for the entire region. There was no venture. There was no entrepreneurship per se, the way we see it in the US. But then government's kind of focused. And that's really what's been driving the market, is that government push across the region. The unique thing about Saudi and UAE is they have the capital to do it, right? Egypt, like Pakistan, loves entrepreneurship, but they just don't have the capital to support the ecosystem as much as Saudi and UAE. So what you're seeing is we've also declined across the region, but not to the degree that you see the US, right? So Saudi and UAE have held up fairly well. They're still down in the 40s, 40% down. Pakistan is down 80-something%. Egypt is down 70% because there's no liquidity in those markets. So that's the big differential. Now, the real opportunity, the way I see it, is Saudi and UAE are not only propping up their markets, but for them to grow unicorns, they need the entire region. So they need Pakistan market, they need Turkey, they need Egypt, because these are massive populations that they have to tap into, right? So there's a unique opportunity for Pakistan specifically, given the closeness that Pakistan has specifically to Saudi Arabia, to actually get some of that liquidity. And I'm talking about startups, not the governmental layer. But I can tell you from all the VCs that I speak to, including 500 Global, we like the Pakistani market. You can't ignore it. We see that there is opportunity. We all want to invest there, but the macros are hurting, right? As they're hurting Egypt. Egypt has had a huge pullback by many of the regional VCs for the same reasons. Currency volatility, high debt to GDP ratio, issues with inflation. All of these things impact us as investors. So I don't think you could run away from the macro. But looking at the bright side is you have actually a neighbor or a couple of neighbors with liquidity that are ready to invest. It's a matter of getting your economy together, at least to be stable, to take some of that investment.
Okay, so bare minimum stability as the driver, as the catalyst here.
Let me say
yes.
about stability. Don't think of this from the US context. Stability to us is still there's volatility, right? I mean, we're used to it. You know, I've invested in these markets for 2 decades. Yeah. We're used to volatility, but not to this degree.
Some common sense economics.
Some common sense. We're ready to take risk.
Yeah.
And all of us who invest in emerging market understand that we're not going to get US or developed market style investing. We're okay with the excessive risk or excess risk. But I think now it's hitting a place where it's very challenging to actually deploy money.
Got it. Kalsoom, let me ask you a question related to that, more from the internal dynamics of the ecosystem in Pakistan. I was speaking with a founder who's got a local tourism business, a startup, and they had 2 interesting things that stuck with me when I talked to them. One was the internal economic dynamics now mean that domestic tourism is growing because liquidity is hurting people, so they want to travel within Pakistan for vacations, which is great for business, but also given as Amjad, you were saying, the state and the GCC or Saudi propping up certain sectors like tourism, particularly in Saudi Arabia, they saw that as an opportunity to diversify into the Saudi market, which is, again, a potential play for them to expand the other way, right? Saudi needs Pakistan, and a Pakistani entrepreneur can grow and thrive in the Saudi market. What are some sectoral dynamics you're seeing in the ecosystem where, amidst this doom and gloom scenario, there are these rays of hope or business leaders that in certain sectors where you say, okay, if you survive this current wave and grow with discipline, the 10-year, 15-year outlook for you is really solid because the founder is good, but more importantly, the sectoral trends are heading in the right direction.
Yeah, I mean, I think what's interesting right now is, as an investor in the market, we have 14 companies in our portfolio right now, and most of them are solving Pakistan's largest problems, right? Some of them have diversified outside. I think what's interesting is seeing kind of how the dynamics of the companies. So like we're an investor in a company called Dealcart, which is not quick commerce grocery, which we saw, you know, a company like Airlift, you know, raise a lot of money and unfortunately fold, but actually the opposite of it, which is literally providing its group buying for groceries for lower socioeconomic brackets, right? In the field of, like, you know, the sentiment right now where cost of living is going up significantly, where group people are more price conscious. People have always been price conscious in Pakistan, by the way, which is why my thesis about quick commerce was never, my partner Misbah and I have said no to every other deal like that, because we always believe that Pakistanis care about prices,
Are you saying
right?
people don't want 8-minute ice cream from the local store.
Maybe cigarettes, but not ice cream. But in terms of that, like, Dealcart, they from day zero, and these guys are, ex-cream operators, like really, really smart. From day zero, we're focused on their unit economics, right? They were looking at their contribution margins, how to get it positive, looking at like how to actually build this at scale. And I think what you can see is that there's still similar trends. Because the opportunity is so large in Pakistan, and given the current market, the problems are still the same problems, right? Mobility is still the same problem. It's more about how you're looking to solve it, how you're thinking about and keeping the consumer at the center of the problem that you are solving, right? So for Dealcart, it's really knowing that consumers super, super well, right? Like, what are the products that they're looking at? A lot of those consumers in the lower SEC brackets are not looking at tier 1 products, right? They're happily buying tier 2, tier 3 products, right? That are a lot cheaper. As an example, in terms of fintech and in terms of financial technology, a lot of those companies are growing pretty significantly, but a lot of people are thinking about savings if they have anything to save, right? Like there is a lot of opportunity. Our company, ABHI, in our portfolio, which is a financial wellness platform, started to diversify outside of Pakistan, but they're already seeing, because they are doing earned wage access, seeing a huge amount of growth, even still in Pakistan, but started to grow outside of Pakistan to the UAE and now also in Bangladesh as well, because they realized as a company that you want to be able to mitigate the risk of the Pakistan market right now and to be able to diversify and have that kind of in your portfolio too. So I think that the problems that you're solving are still the same problems, but if you're a founder that was focused on the right thing at the right time by being frugal about what you were building, you might see the solutions change slightly, but I think it's really down to the founders and how well they know their user base and how well they're willing to adjust themselves. And I think that's really where you'll see winners in these markets, right? And every time we've seen things go down in any economy anywhere in the world, in the startup space here, that's where we saw some of the best companies come out of these spaces, right? And I think in Pakistan, we're going to see that happen as well, where the founders that really know how to build in a time where things are down, those are the companies that are going to succeed when things are up regardless. And I think what happened last year and the year before was we saw any company that had an idea could raise money, right? It was not hard to raise money in Pakistan. And I think 500 are, like, as an example, are investors that are staying, or we're always had that risk appetite. But a lot of those investors didn't really have the risk appetite. They just had the liquidity. They were always going to be, Pakistan was always going to be an exception to their portfolio. It was never going to be the rule. And I think what we're seeing now is, like, the founders that are building good businesses are still able to raise. It just may take a little bit longer. They may need to show a little bit more, but I still think we're going to see that trend continue.
Abbas, let me ask you about the thrust of innovation within Pakistan, right? And I'll give you an example in the sense that in India, a market that I personally closely follow as well, there was this view where the government said air pollution is terrible. Growing energy imports are a national security problem over the long term. We need to diversify, and electric mobility became the thrust of public policy. That then led to a company like Ola, which is in the ride-hailing mobility business, to say we're actually now going to start making electric scooters because it's not only good for the thrust in terms of the thrust of public policy, but good for our business because clean miles are more efficient, our margins can grow, we build a product. Where are you seeing the innovation opportunities in the broader Pakistani market at this point? And link that also, if you can, to the broader state of the talent ecosystem. Is something Kalsoom and I also frequently talk about, and you should chime in as well, that when the boom was really on, there was this competition for a limited supply of talent, which also made the dynamics of the economics much more challenging. So state of play of innovation and state of play of the talent market right now.
Got it. The talent market is a little bit simpler, so I'll start with that.
And that it's just hard.
Yes, it is hard, right? Even when there was a boom, it was hard. And it was hard for two reasons. One, the talent pool in Pakistan is very, very specific, right? One, it requires a certain level of risk appetite for people to come into. So anyone who doesn't have a buffer in their savings account or through their families is going to be a little bit challenged to take on that risk, right? And that's the majority of Pakistani population, right? And then you saw like this new talent come in, which was really, really great, which was relatively younger people people who'd worked in the early stage of tech startups when they were launching Pakistan with Scream, Uber, some of the other ones, people coming out of Zameen. Interesting dynamic of slightly experienced, but also like fresh grads that were coming in and were suddenly like, oh, this industry exists, is viable, and is gaining mainstream, right? So it was kind of a thing that there's a specific pool that's coming into the market. At that time, the competition was very, very high because companies that had raised insane amounts of money were paying insane amounts of salaries, right? So anyone who was trying to operate frugally had to be very, very cautious about how do we hire? How do we find the people who have the hustle and are willing to work for a cause as opposed to just, hey, it looks cool. It's giving me a lot of money. I suddenly have a high title because I'm joining a tech startup. You had to sort of bifurcate between the two. But one thing that it led to is, one, that realization, and that realization is continuing, that this is a viable opportunity, both for founders and for the talent pool. And that's very, very interesting to see, because the talent pool that's still applying has that risk appetite, has that hustle, is willing to sort of work with frugality without what we like to call shashke. And it's all the luxurious things you would get in a tech startup. So there's that, right? At the same time, obviously, there's the counter side of it as well, that a lot of people, a lot of smart people who came into it are just now realizing the risks associated with startups, right? A lot of people who worked in New York, in San Francisco, in other markets have realized that with high reward comes high risk, right? Which seems to be common sense, but when a market is so young, people sort of forgo the risks of it, right? And then they only realize when they're directly affected by it or see someone being affected by it. So the layoffs that happened in Pakistan in a tech space were the first ones in this space to happen, right? And I think it was necessary to sort of mature the talent pool as well. So now someone who comes in, like I said, is a little bit more risk-friendly. In terms of the innovations happening in the broader space, some things happened with the government, with the support of the government, some things happened despite it, right? So EVs, for example, is something that does get support from the government in Pakistan as well. Bykea has been one of the early players that have been trying to experiment with EVs and how we can use EVs, but also sort of introduce them in a space where other people can earn from it, right, without having to make the investment of buying it, sort of use Bykea as a buffer to sort of, take those EV bikes on rent and earn that. I think it's still a very early space for Pakistan. The infrastructure yet doesn't exist. Similarly, the government does seem to be sort of incentivizing people to sort of export their products, whether that is SaaS products or whether that is services, and that seems to be a space that continues to expand. We just saw one SaaS company in the HR space raise capital in Pakistan. We've seen some previously raised capital in Pakistan, even within the tough economy. So I think that the government is sort of focusing on how can we export tech, because we do have a lot of talent, we do have a lot of expertise, and while the market in Pakistan is challenging, there is a space outside to sort of leverage. Within Pakistan also, like I said, because people need, there's two things you can do for them right now. You can either help them save money, either through lower costs, through easy savings. To put things into context, like Pakistan's saving markets in terms of stock exchange is one of the lowest in the world in terms of the percentage of population, right? We have only 225,000 people who actively invest in stocks. Most of these are institutional investors or investors who come from a finance background or so on and so forth. There's actually very little consumer stock investment in Pakistan. So people are actually not, people don't know how to save, right? They don't know what indexes are. They don't know anything beyond a current account and a saving account, right? And if you go talk to anyone in Pakistan beyond that 1%, beyond that 2% of people who are richer, they don't know how to save. So there's a massive space there in fintechs that they can, sort of get into. So you either save them money or you make them money, right? And make them money through either the gig economy, so people coming still, like we see, a lot of drivers still wanting to drive on Bykea, in fact, more so, which is why despite the tough challenges that we see right now, Bykea has continued to grow, right? So the opportunities do exist, right? Both in terms of export, but also if you can get someone like Deal Card, save money when they're shopping, save money in accounts or indexes or ways they can sort of convert it into larger amounts, or help them just make income. And within Pakistan, if you can do that, you will come out of this tough time and be very, very investable or go for whatever you want to go for.
Can I add to that? Because I think in the EV space, to the point of what Abbas was saying. So, and I know that you know these guys, but we're investors in Easy Bike, which is building electric vehicle two-wheeler scooters. Two-wheeler, basically bikes. And they had to, right now what they realized is that, again, because the infrastructure doesn't exist, and I think this is kind of the amazing thing about Pakistani founders is you kind of have to build the road in front of you, literally and figuratively. And so in the EV space, right, what these guys are actually rolling out on Monday, next Monday, yes, actually, is they're rolling out the first battery swapping stations for electric vehicle bikes, right? Because you can't just roll out bikes and have nothing to do to charge them with, right? You can't partner with a TCS or a Bykea or whoever and not have a way for those riders to be able to quickly be able to move in between stations, right? And so with Easy Bike and what they did, and Zip is doing this as well, which just also raised funding, is that they're actually building the infrastructure for this, right? And actually saying, like, we need to build swapping stations, we need to have the technology to do it. And so while the government is supporting EV, there also needs to be support for imports, because a lot of these things don't fully come just in Pakistan. You have to import parts of it to be able to build these bikes, even if you're retrofitting Honda bikes, how to do that. And so I think that's really interesting. And I think in the fintech space, like, you know, I feel like I'm kind of just talking about our portfolio, but I feel like there's a lot that's there in terms of, even with Iran, which is one of our companies, is digitizing committees, right? Which committees have been around for centuries around the world, but in Pakistan, this is how people were saving informally for so long. There's been a lot of schemes where people have been taking advantage of people doing it, but if you digitize it and create transparency, you can actually create people building a credit rating around it if you show that, right? And you can build other products on top of that. So I think, like, innovations are endless when you think about what you can build.
I think the savings point is super important, and I'll underscore on that. Like, one of the conversations that I think the former FBR chairman kicked off in Pakistan was, if you look at official data, Pakistan doesn't import any gold. But we all know people who love to invest in gold instruments in Pakistan or buy jewelry for wedding as dowry, et cetera, for weddings, et cetera. And there's no data. It's not official. It's being smuggled in. And that's an innovation opportunity for a fintech to say, okay, can you have digital gold savings instruments, which have happened in other markets as well, but that requires a regulatory framework, and I'll get to that.
Infrastructure to store gold.
Correct,
right?
and all of the other adjacent ecosystems that are required, and policy changes that then force, for example, informal jewelry retailers to comply with the law of the land as well. And this is something I think you raised once with me on the trucking industry, where weight limits are not enforced and then a formal actor cannot compete. But Amjad, from something interesting you said earlier, that Saudi, UAE have pools of capital that the state is deploying. Are there ways in which, for example, in Pakistan, domestically, pools of capital can be deployed? And I'm just thinking about the fact that there are large conglomerates and families with deep pools of capital that don't deploy it in the way that perhaps you would expect them to. So what's your point of view on, like, alternative mechanisms, in the sense that Pakistan does not have a sovereign wealth fund, doesn't have oil resources, gas resources? Beyond attracting outside flows, what can happen within the market to unlock more innovation and funding for innovation?
So there's no question that there's a lot of capital within Pakistan. A lot of families with a lot of liquidity. Given the capital controls, as we all know, their money is stuck in Pakistan, which in a lot of ways distorts certain asset classes, real estate being one. It's because where else do you put your money but buy land and buildings and so on and so forth. So I think there has to be some incentivization for these families to take that risk. I mean, to give you an example, so I sit on a board of a large consumer packaged goods company in Pakistan. Why would you put your money in anything when you're making 20% on treasuries, right? Why would I take risk on a Bykea when I'm making that kind of money locally, unless you incentivize me to do so? Frankly, one great way could be through taxes. You know, Pakistan has a very strict and tough tax regime, especially on companies that pay their taxes. They frankly make it even more difficult for payers. I can tell you that from our own experience. I mean, I've been on this board for 6 years. We have a whole department that just focuses on taxes every day. So there are ways that you can incentivize the local population. In Saudi, what they've done is they've done a matching program. And I know, again, they have the money. But what they've done is they've told the families locally, for every dollar you invest in tech, we'll put another dollar on top. So you get the returns off that dollar. You just give me back my dollar. So there are all these interesting schemes that they put in place. I think Pakistan, because it doesn't have the capital, can use taxes, can use other mechanisms to allow that. I'll give you another example. We, as 500, are trying to build a fund where we want international investors and local investors. We can't get it done.
Why is that?
Because the structures are not in place to allow that. So there has to be some serious reform to allow a venture fund, for example, to operate one fund where you can have international investors and local investors in the same fund. And I guess the concern is obviously capital outflows. But again, why not have that as an incentivization? You know what? Invest in a startup, 50% of the earnings you can send abroad. That's better than zero, right? So I feel like there are ways that you can be very creative about forcing a lot of this capital, which frankly, there's a lot of it sitting on balance sheets in Pakistan, to invest in their own startups. One important note is the reason why you saw Saudi, UAE do better than everyone else is because they're investing in their own ecosystem. And I'm not just talking government, I'm talking family offices, individuals. They believe in their own market. We need to get to a place where Pakistanis do the same. But I think you need to do it through incentivization. You know, you would know the numbers as well. The thing about the Pakistan market is you have so much hot money going into investments. That's why the minute there's a crisis, it all leaves. You need some local foundation of your own market to keep that stability. Otherwise, it's this hot in and out. Your stock market is a perfect example, right? The minute interest rates are low, the stock market booms because international investors are plowing in. The minute that interest rates go up, everybody leaves. Yeah. Stock market comes down. I mean, the Pakistan market today trades, I think, one of the lowest in the world. I think it's at 4x PE, some ridiculous number.
Yeah, it's
one
been
of the highest interest rates in the world.
Right,
Also.
Yeah.
one of the highest interest rates in the world.
Yeah, and I think that's again to the earlier panels we had as a conversation, right? It's linked to excessive borrowing of the sovereign. Tax policy is critical in that. The growth of money supply is critical to that. But then also there are, as you said, creative ways to solve for it. And as you were saying that, the thought that came to my mind was the UNDP says about 3.5 to 4 billion a year are provided to corporate Pakistan as handouts, right? And Dr. Khwaja and Hassan and others were saying earlier that you can direct those subsidies to direct transfers to the poor, much better utilization. But also on the corporate side, you can take those handouts that are going into rent-seeking sectors of the economy with high guaranteed rates of return and target them towards innovation and the battery charging infrastructure, other things. And this is one of my pet peeves. Some of you in the room may have heard me say this. A lot of times when Pakistani ministers come to this town or Pakistani political interlocutors or government interlocutors, one of the things they say often is look at the return on equity for publicly traded Pakistani companies and compare that to India. We are much higher, therefore we're a great investment. And I always say to them, this is a terrible argument to make because the high ROE exists because your market is protected. If the market was not so controlled, capital would flow into where there are abnormal profits and normalize them. And so if you're telling somebody as an international investor to come into your market because there are high ROE, well, it's a function of barriers. Therefore, they won't be able to enter the market. And again, those barriers have to be reduced to target that investment. Kalsoom, something we have talked about, and I will, in the last 30 minutes, get to the policy side in just a moment. But this issue that I think a few months ago you had raised with me was, you get good talent at sort of the developer level, but the middle management, upper management is still a big gap, particularly on the chief security officer side and some of the more technical things in Pakistan. What's the state of play in that side? Share with the audience, because the 3-4 of us here know, some of the audience knows. Help them understand the challenge there, go a bit detail, and how do you see the ability or the way in which that can be resolved? Like, what are the things you would like to see happen to solve for that?
I wish I knew the solution to this. This is probably the question that keeps me up the most right now is the talent brain drain from the market. It is, I've been working in the market for 12 years now. This is the worst I've seen it ever in terms of just the amount of people leaving. And you can't fault people for wanting to leave, right? Because it's such a bad situation inside Pakistan right now. And so I think to Abbas, what you were saying before, there was always an issue on talent in Pakistan. Whether it was the opposite issue of like startups that were raising a lot of money over inflating salaries for people that were going to work for them. And so we were seeing like people that were demanding like crazy amounts at an entry level where, and we being like, you know, even though we're investors in these companies, we work really closely with our companies, especially on the talent issue. So helping, you know, place people in companies, we work on retention optimization of their talent pools. So right now what's happening is, you know, everyone that is really good gets hired to leave the country or gets hired by a US company. So even if they're staying in Pakistan, they're earning in USD or Australian dollars or pounds. And you can't, as a startup that's earning in PKR, can compete with that, right? Or if you can, it's only for a short amount of time and it's gonna affect your bottom line, which is your big priority right now as a startup, is to have your unit economics be, you know, very much your focus. And so I think the biggest thing right now is like just seeing, I think we're getting a lot of low-level talent, and even that low-level talent is gonna leave really quickly. And we see like gig economy too on the tech side of things where people are working multiple jobs. And so if you can't afford to pay people high enough salaries, they're gonna work multiple places. Then you have issues of people that are maybe more mercenary hires and missionary hires, which means that they're not working for the vision of the company, they're working to just get the paycheck, which is a challenge for a company that's looking to grow. And then you have issues before, like a couple of years ago, I think the easiest thing for me was that, you know, the amount of people that I would get messaging me on LinkedIn that was like, hey, I was at Pinterest and I'm moving back to Pakistan. I might be interested in working for one of your companies. And literally that person is now the CTO of Dealcart, right? Like there was someone else who I placed who was like head of product at Ryder in our logistics play that we had. Similar, really amazing background. We don't have people wanting to move back to Pakistan right now. So those types of messages have dried up. And I think what's the issue is that you just have also this middle management layer, and Musharraf and I were talking about this yesterday actually, that's completely missing, right? So you don't really have like strong middle managers in these companies. So you have to upskill your own lower level talent. But then if that lower level talent is leaving, you're constantly thinking like, how do I actually retain talent right now? Do you maybe think about it as a smaller pool? So maybe like you have a smaller pool of people that you just focus on rather than a large pool that are always gonna be leaving. I don't have the solution to it right now. It is literally the problem that I think about all the time. We're actually gonna be doing a peer session with our companies as people kind of brainstorm solutions around this. But I think so many of our companies, this is what stresses them out the most, right? Because they know what to do when it comes to actually addressing the problem that they're addressing. It's more about, do they have the people to help them get to where they're going?
Can I add something to that that's really critical, and I'd love to hear your thoughts as well, is if you look at the arc of the Middle East as well, countries, what really started working was giving people shares in the company, right? So you had a Bain consultant, a McKinsey consultant, a lawyer leaving, working for a startup, less money because they believed in the equity, right? And Kareem, I would say, had a lot to do with that. People made a lot of money. You had Souk exit, people made a lot of money. You had other investments, so there was evidence of that. I don't think you've seen that in the Pakistan market. So people are not willing to take the jump because frankly, they put very little value to the equity that you're giving them. And in the startup universe, ESOP is a big deal. Yeah. That's where you gain your wealth. It's not your salary. If you're gonna start off for a salary, think again. Yeah. You're really thinking of it about the context of the exit and that big potential where you create wealth. Mm-hmm. If that's not there, then the story loses itself.
Yeah.
And what's happened with us, for example, to give you an example, we were under pressure as a large company, people wanting to go to startups the last few years. Yeah. Now that's gone because they don't believe in equity. They're like, no one's really made money. So it's kind of stopped.
Yeah. I think also in times of scarcity, right, people want and crave stability. And so to the point of what Abbas was saying, it's like we had a series of layoffs happen in the last few years with companies either closing down or just right-sizing, downsizing, however you want to call it, right, of being able to see that. When people see that, that becomes one reason why they're like, I don't want to go work for a startup because there's no stability in it. And I don't blame people for feeling that way, but I think what's important here is, like, you know, when it comes to ESOP, I think that's important, but the challenge with that too is, like, this is another issue, is that we don't really have like a steady stream of exits in Pakistan, right? And then when we talk about the stock exchange and people going public, we don't really have an active stock exchange, so that going public doesn't really mean much when it comes to an exit, right? So when you don't really have like that lens of like, where does this company go? Because people accumulated wealth by working at Cream because Cream exited, right? Like it was acquired by Uber. And so that's where we saw the Cream effect happen, of people going out and then starting their own companies, and then people being really excited to work at a startup. And so I think an issue, and also something that's happening now, which is also kind of promising and interesting, first of all, is like, where did the exits come from? And as a fund manager, I have to answer this question constantly when I'm raising money for my own fund. But also the second thing that's happening that's actually kind of interesting right now is there's a lot of local consolidation happening in the market. So we actually are seeing mergers and acquisitions happening at the local level. We were seeing it happen at the regional level last year when people were outside looking into Pakistan, and I think that will probably pick up again as things get better, hopefully next year. But right now, what we're seeing in this market of scarcity, we're seeing players merge or acquire because they realize that that's what they need to do to survive, to be able to hack growth, to be able to show that they can be bigger as a result of it. And I think that is actually really promising, because if we knew the mentality that existed before was scarcity, was like, I'm the only person that can have this pie, right? I think what's happening now is people realizing, if I share the pie, we can all grow. And that type of activity, to me, which is actually like in the data that our company, the sister company that I founded, releases on a quarterly basis, we're actually seeing that M&A activity at the local level tick up. And I think that is really interesting.
I'll just add one quick thing here, from an operational point of view, because this topic is really close to my heart, right? To quantify it, like in the four years I've spent at Bykea, 1 year would be just on talent, right? That's how important it was for our growth, right? At an operational level, I think we do see now conversation happening around fractional talent, right? Where you see, hey, we have like 100 really, really great people and 1,000 companies going after them. Can we sort of fractionally divide those people as, you know, for their expertise, right? And they sort of create the talent pool that is emerging from the grassroots level, what you call training. Because what is happening is also very tricky at a startup level. If you're an early stage startup, I know Kalsoom mentioned, like, you know, you have to train your lower levels because there is no middle level that exists. Startups that are at Bykea stage may be able to do that, but companies that are 1 or 2 years in cannot afford to coach. You cannot afford to coach. You're not a school. If you start coaching, you're going to die down, right? Because you absolutely don't have time as a founder or a co-founder to invest that much in your first 2 years. And I know it sounds all great when people talk about it, but ask any founder who's in the first 2 years of their time, and they will not be able to do it, which is why we see a lot of cultural problems start arising in the 4th and the 5th and the 10th year. But that cultural problems are a natural consequence of surviving, right? So I think that fractional talent is starting to exist. I myself was what we in Pakistan call a Pakistani, right? I was living and working in New York, and I went back and joined Uber when they were launching in Pakistan. But so I understand that, and that has shrunk completely, like Kalsoom said, right? It's actually the other way around. So like Kalsoom said, I don't know what the answer to the problem is. We all understand that the problem exists, but it is a tough problem to solve. And whichever founders have been able to sort of retain that talent, right, especially at a leadership level or a senior level, are the ones that are surviving right now.
And perhaps it's not a problem that should be or ought to be solved by the startup ecosystem on its own, right? Again, I would connect back to the first keynote or the fireside chat with Dr. Khwaja. The education system matters, and the incentives in that system matter. Are you investing in incubators at that university level? And again, I think, at least from my point of view, there's this disconnect in terms of, the people think of a handful of universities or places of higher education that count in the ecosystem in Pakistan, IBA, LUMS, a couple of others. But is it translating into sort of the second tier, third tier of universities and colleges as a innovation opportunity, right? If it's not, then there is a role for policy to be that market maker, I would argue.
I think there are. The Higher Education Commission right now, I mean, they've had these ORIC centers, right? These research commercialization centers that existed. They have actually started to invest a lot more money in actually improving and upskilling these programs and innovation programs at the university level. Still a lot to be desired, but there's at least that effort that's happening.
Before I ask my last series of questions, if you want to ask questions, go to askac.org and post it, and I will ask the group here. Just it's easier for me to keep a track of the flow. I will switch to policy, which again, actionable roadmap is what we're trying to get out of this conference. I won't ask the 3-month or 6-month outlook, but let's assume elections happen on time, and let's assume there's a government that has some level of mandate. And like let's ignore the political dimensions, which we'll talk about in just the next session. What would the three of you like to see happen with a new government in charge that is perhaps a wish list of 3 to 4 things that give you more confidence to go into meetings, whether abroad or internally in Pakistan, and say, you know what, things are coming back to life. There's an interesting development. The government is serious and has some credibility that it's trying to restore. And more importantly, related to that, that then gives you the confidence to say, you know what, the sentiment that has shifted is going to go back to not maybe the boom years of 2020, 21, but to a level where the sustained growth can occur. What would you like to see happen? And maybe I'm start with you, and then we'll go.
Yeah, I'll tell you from my experience of being on a board of a company. I think one of the issues that you hit on, for example, is this import of goods. I think they forget that importing goods means productivity within the country to be able to produce product. We've had huge problems just getting LCs opened to bring in imports. So things that simple are not working. So for me, this entire framework of how to be business friendly, to allow companies to have a little bit more freedom to operate and to actually create, I think is super critical for the country's well-being. I think it was said earlier, there's so much talent and potential locally, whether it's startups, frankly, or big companies. For example, we would love to expand abroad. It is miserably difficult because, again, capital controls won't allow you to market even without controls to other countries to sell product to export. So there are all these restrictions that are stopping companies from expanding, whether locally or internationally, that I think we need to look at on a very detailed basis. Sort of go to them and say, what can we do to get out of your way? It's really, in my opinion, that simple, is to say, what are the barriers and how can we reduce those barriers to allow you to grow? 2 is I'd like to see some incentivization of local investors, as we mentioned before, of how they can start getting involved in SMEs, not particularly only tech, but there are other great opportunities, even in the real economy, to invest. So we tend to talk in tech because we're all in tech, but there are other massive opportunities.
There are non-tech startups.
Exactly, there are non-tech startups.
Or non-tech startups.
Absolutely, absolutely. I mean, I'll tell you, F&B is one of them. There's a tremendous local F&B, like creating F&B brands locally. That's really exciting, right? And they are growing, and you can actually invest in them. So some incentivization, whether through the tax laws or rebates or something at the local level, I think to get local investors excited about these opportunities would be critical. And then last but not least is how do you make it easier for international investors? You gotta crack the Saudi money out there. You gotta crack the UAE money out there. It's massive.
And just to be clear, you mean the non-sovereign, non-government side?
I'm talking non-government. I'm talking there are, and I can tell you from my own experience, Pakistan, again, because of the makeup of the region and how small it is and how fragmented it is, GCC investors tend to look at the adjacent markets as their opportunity. Turkey was a huge beneficiary of that when Turkey was stable. I mean, GCC was the #1 investor in Turkey for about 10 years, right? Pakistan, I think, could be #1 overnight because people have an affinity towards the market, whether it's culturally, because of religion. Every big company I know in the GCC would love to have a footprint in Pakistan. Literally every. Some of them were unfortunately much more active before this last bout. I mean, seriously looking at M&A. I mean, we've had conversations with people, and now they've disappeared. There has to be a way that you open up that corridor because it's significant for the local economy, right? Whether it's sovereigns or non-sovereigns or semi-governmental. You know, I mean, I'll give you a prime example. There's a government backed by the Abu Dhabi sovereign wealth fund called Agathia. They're a food company. They're buying up everything in sight around the region. They're dying to get into Pakistan, right? And we're talking big checks here. We're talking hundreds of millions of dollars, right? Backed by the sovereign government. It's a public company, by the way. You can look it up. They've done acquisitions in Egypt and in other locations. They'd love to do business in Pakistan, but they just, at this stage, they're just not willing to.
Abbas, from your point of view, what's the wish list?
I think one of the key things I'll come to is what Amjad actually said in a different way. He said, you know, the government should go to these people who are doing it and ask, how do we get out of the way, right? There are a few examples of it, right? For example, where you see the intent of the government just playing out in a way that you don't want to see, right? You saw the intent when they were creating these tax-free zones for tech companies, right? In areas where they thought were slightly yes, right?
And the Special Technology Zones Authority. That
yes, where if you would register, you would get tax breaks and all kinds of incentives and set up offices, and similar to what Abu Dhabi's been trying to do after seeing the success of Dubai, right? So, however, the amount of consulting that went into it and the outcome that came out of it was very, very different, right? The tech startups, the tech industry wanted to see different areas being developed, different kind of incentives being given, and what was developed was mostly a ministerial project to show that we've done this, right? Or a real estate play, right? As always, for most things. Similarly, you see how M-Pesa sort of boomed up in Africa, right? It's a massive success story around the world. It's why a lot of fintech started popping up with mobile money. But you see, if mobile money is being taxed at 27% in Pakistan, that is insane, right? Because mobile money is something that all people should have access to, and this is actually disproportionate amount of taxes for people who are actually more vulnerable. And therefore, you will never see an uptake of mobile money being transferred into their fintech wallets and being used. Everyone's tried a wallet play. They're just not succeeding because of government interference and how it's taxed, right? And there are a bunch of other things you can do, right? So one is get out of the way. Two is give tax breaks, not just at an industrial level, but also at an individual level, right? And maybe something I'm thinking of right now arbitrarily, based on your thoughts, is maybe don't just give tax breaks to companies or areas, maybe give them to individuals who are working in these companies, right? Because like you guys said, there's no recent demonstration of ESOPs having any real value because there's no exits, right? So, and Pakistan, recent taxes for employed people who actually pay them are actually pretty high for emerging markets, right? So can you incentivize people who are wanting to go into tech space and sort of help the tech space get that talent by giving those individuals tax break as employees, because that automatically boosts their income, right? So one play is taxes, the other is sort of just understanding what regulations exist that need to be rolled back, right? Up till very, very recently, you could not, as a founder who is Pakistani, registered in Pakistan, take money out of Pakistan after an exit, right? For the longest while. And it's only the founders and investors sort of getting together and sort of pushing that regulation that it worked out to a certain extent. So most of the blockers that we see at a policy level are actually just government having unnecessary regulations, unnecessary taxes that could be reverted into collecting taxes from elsewhere, or the untaxed economy. Repeal, if you really want to raise money, and this is going beyond the scope of it, but repeal some of the subsidies you give to sugar and agriculture and all of that stuff, and sort of reinvest that back into the tech startup space. Because if you look at your neighbors in India, their tech economy is bigger than your entire economy, right? That is massive. That's the opportunity that exists in Pakistan that still has a massive population. So the opportunity is clearly there. I think it's just getting out of the way, repealing some of the regulations, repealing some of the taxes, giving more tax breaks, and sort of helping understand the importance of the tech industry or even the startup industry in the real economy, and sort of help them get established before you start, making money off them as a government.
Kalsoom, before you jump in, let me ask you a separate, not a separate, but added question to this, because we worked on this earlier this year, is the need for more transparent, more inclusive policy making. And of course, our conversations were in the context of internet bans, data localization norms, things that we heard, and we remember it came up in those conversations. A lot of time, policymakers would say, "Well, India is pursuing data localization or have certain norms that the EU has, so therefore we want those too." Or there are certain things that we need more control over the internet because there are social reasons for that, and that obviously casts a dark shadow. And our sort of conclusion in that conversation was policy should be biased towards innovation and entrepreneurship, not towards protection or other side effects, because the dynamics of the Pakistani economy, as you just said, are very different than India. It's a much larger ecosystem with much larger pools of capital and much more attractive. So they can afford some of the headwind creating policy measures that perhaps Pakistan can set itself apart from in the region and say we do things differently. So I wanted to add that context before you share your wish list, because I know it has come up a lot through the summer on the issues of internet bans and controls and regulations.
And the personal data protection bill. Yeah, I mean, I agree with everything that has already been said, and I think just as context as well, our fund, IDI Ventures, is one of the founding members of the Pakistan Venture Capital Association, which technically was announced in 2018 and then kind of stayed dormant for a little while. And now, especially in the last year with everything that's been happening, there's no better time, honestly, given the current environment in Pakistan, for us as Pakistan-focused funds and also international funds. 500 is coming on also as a member to actually come together as an industry to say, what do we advocate for? And our voice is actually stronger together rather than us individually in these silos talking to people. And I think one thing to place in context, right, to what Abbas was saying in terms of government getting out of the way, it's getting out of the way, but also listening, because I think, and genuinely listening. And I would say that, I'm not saying that in a way that like they never do it, because actually when you look in 2021, one of the legislations that happened, which was the result of a working group with players from the Pakistani startup space, the VC space, the other founders that were on a working group that was advising the State Bank of Pakistan, actually led to a major game-changing legislation that changed the entire startup ecosystem. And that was allowing startups to be able to set up holding companies abroad legally in order to be able, and that automatically, before startups would have their entity in Pakistan. If they set up outside of Pakistan, it was like, do it, but ask for permission later. Then it was impossible for VCs to say, how do we not only put money into Pakistan, how do we get money out of Pakistan? It became a huge barrier to entry for a lot of these VCs. That legislation, which was literally the result of the State Bank listening to feedback from people, players from the industry, changed everything. It actually said, it allowed VCs to say, oh, I don't have to put my money into Pakistan. I can put my money in this holdco in Singapore, Delaware, Abu Dhabi, Dubai. Immediately allowed that to change and shift everything. So one thing that was really interesting, and this was when Dr. Bykea was the head of the State Bank, and also the SECP has had really good progressive leadership as well. I think it's actually continuing that type of work, right? If we were to say, like, if there is a new government that comes into play, what do you do? It's actually saying, like, not only getting out of the way, but actually really listening to the stakeholders that will benefit from any legislation that happens. And also saying, like, there has been legislation that has benefited us as a result of that, right? And you can point to that. And so not only that, I think one thing is, like, we've always had working groups around the State Bank and the SECP in Pakistan. We've never had the tax regime ever in a room, right? And that is literally one of the biggest, most onerous barriers for startups and SMEs and the growth in this country, to what Amjad was saying earlier. So how can we actually create tax benefits for people that are, building these companies and not actually suck them dry, which is what's happening right now? If you are a founder building a company and try to be legal in the country, you will die just based off of taxes alone sometimes, right? And so those are things that I think are really important. When it comes to things like the data protection bill and all of this stuff, it's really important for these bodies that are being set up, like VCAP, if we are successful as a group, is to actually say, how do we advocate together, right? How do we actually, as a result of, like, you pointed to a really important thing, which is that if you are a fund, you have to be, most Pakistan-focused funds, there's 7 of us. I think outside of 2, everyone is set up outside of Pakistan. that sucks. Like, we should actually be set up in Pakistan, but it's impossible to raise money from outside of Pakistan into our fund vehicles, and then we can't access the liquidity in Pakistan. It's like just a total, and when you were saying this, I was getting PTSD from like every lawyer that I spoke to where we tried to figure out a solution around this. It is so difficult and creates so much anxiety. And so most of us are set up outside. If you actually improve the fund legislation, which right now is based off of, it's an iteration off the mutual funds legislation, right? Right now, which mutual funds and VCs operate totally differently from each other. If you actually change the legislation to reflect the way venture capital funds should operate, if they're able to both leverage international money, like not just have a sidecar vehicle in Pakistan, but actually have a vehicle that can access both and have one, you still have a Delaware entity and have a Pakistan entity that can work seamlessly together. You don't have to worry about money leaving the country because all that money ultimately is flowing into investing in the country in the long term. So I would really fix that legislation.
Okay.
As you can hear, I'm
So
like, PTSD.
that's one of the key takeaways from this conference is to fix that problem. I will make a note of that in our takeaways
Yeah, and that's
document.
one thing VCAP wants to work on too. So
I'll go to the audience question, and we have one up here on the what was the knock-on effect of the Abraj meltdown and the KESC exit fiasco on the ecosystem. I think it's an important one, particularly because that exit would have changed the dynamics, at least in my opinion, on the way PE money operated in Pakistan. But any of you can take, but I think you're the prime candidate for this question.
Unfortunately, I had a front row seat to this because I was actually running a private equity firm at the same time. So no, Abraj had a really significant impact on fundraising in the region for a long time, and even till today, I would argue. You know, you went from a position where people started feeling like emerging markets were so interesting. A lot of institutional money started coming in. I think it's important to note that before Abraj, you saw very little institutional capital come into these markets. What I mean by institutional are large endowments, pension funds, specific US and more developed market ones. They were able to attract that capital into emerging markets. Before that, it was very light. So when they sort of became the bad example, all of these funds retreated. And Abraj was actually the first investment for a lot of these guys into emerging markets. So it just scared them. I mean, I can tell you a prime example of I won't mention their name, but there's an LP, a large one that sits in the DC area. And I went to talk to them like a couple of years after Abraj. The minute they heard Middle East, the guy started laughing. And he said, we're not touching anything in that area. And he told me that Abraj was their first emerging market investment and that they're not doing emerging markets for quite some time. And we're talking about a significant asset allocator. So it hurt. It hurt the market. People felt like there was no trust in the market and the GPs, that they weren't built effectively. There was no corporate governance. So I think it really caused a lot of issues that are continuing until today. I mean, the PE industry in the region, I would argue, doesn't really exist today. I mean, there is no structured PE industry. VC is actually better.
Yeah. There's more VCs.
There are a lot more VCs.
Even so in Pakistan, there's not that many PE firms.
I mean, PE firms have been obliterated. And it's unfortunate, but I think the ripple effects were significant.
Got it. I think this will be the last question before we wrap up because we have 10 minutes to go. And I would ask all three of you, maybe starting with you, Kalsoom. Dr. Khwaja raised the issue of friction. When thinking of retaining talent, what are some of the biggest complaints you're hearing from young educated graduates in the tech sector? I would broaden it just to the broader real economy as well, because not just a tech sector issue, at least in my opinion. And what equivalent safety nets would need to be in place, or is it more about removing frictions for young men and women? So maybe start with you, and then we'll go to Abbas and Amjad.
I think this is a really good question. There was a tweet that went viral a couple weeks ago that was really interesting in terms of the conversation that it led to. And it was a conversation by a friend and colleague of mine actually in the space, because he was saying that one of his portfolio companies was like, these tech graduates are working at multiple companies and how can this happen, and this is not okay. And then when someone asked him how much was that graduate making, I can't remember the number, but it was something like criminally low, right? And so when you think about that, it's like if you're making such a small amount of salary at a time where cost of living is so crazy in Pakistan, it's so hard to live there, right? And then how can you fault anyone for wanting to work multiple jobs? So then when it comes to the solutions around this, my thing, even when, so many of our companies are really good at addressing this, and I've spoken a lot to like their heads of people, how are you thinking about things? And building good culture isn't about saying like, let's have ping pong tables and like, beanbag chairs in an office. It's really about saying like, how are we building cultures where we're actually respecting the talent that's there? So whether it means getting paid what you're actually worth, really thinking about cost of living increments, getting paid on time, because sometimes, if salaries don't get paid on time, that's a major issue. And then also when it comes to, when the question was asked about men and women, I also think about the fact that so many women are left out of the net by virtue of some of the structures that are in place. Like when it comes to like, someone may set up an office in a sector in Islamabad that is not very safe, right? And so how can you expect women to not only get to the office safely, but then if they have to work late, get home, right? So this is why like this was actually Airlift's original idea. This is what Swivel was doing, and now what Maha Shahzad's company Buskaro is doing now. Pick and drop services are really great. Like providing that to the people that are there in terms of getting people there and home safely, having more remote work, right? Being able to have the flexibility that people can work safely at home. I have a majority, my investment team is all women. One of whom is a single mom, and then our team on our sister company, majority women, having like flexible work hours, having like thinking about like if someone is a mom and has to go pick up their kid, they should be able to do that, right? In order to have them still be part of the net and continue working. And so as we think about that of why so many women in Pakistan end up not working after they have children, after they get married, a lot of those issues are structural issues. If you as a company can actually reduce those structures and actually improve it and reduce the friction to the point of the question, I think that is something that I'm seeing it amongst our portfolio. A lot of them are having pretty diverse workforces, but we're also starting to implement policies, like helping them think through policies of how do we actually be more equitable, how do we reduce that further?
I think there are a few things, right? I think one weird thing that may happen because of this economic downturn is more women are going to get into the workplace. It's no longer a single person earning economy in Pakistan, and we see that starting to happen. To put it in comparison, if 30 to 40% of women work in the formal industry in Pakistan in KLI, the numbers in Dhaka and Mumbai is over 80% and 90%, right? So there's a massive difference that exists because of structural problems, but also cultural problems. I think the structural problems have to be solved because the cultural problems will be superseded by economic problems, right? So I think one trend that's going to happen in the next few months, next few years is more and more women are going to come into the economy and simply try and uphold and sustain their households. Now, how do you create the structures for that, especially for women, right? I'll give you an example. If you take a list of all companies in Pakistan and figure out how many of them offer daycare services, offer nannies, offer feeding rooms, offer nappy changing rooms, you will be left with maybe 0.5% of the companies, if that, right? If that. I'm being generous by saying 0.5%. If you look at, we did this survey when we were trying to create, baby facilities at our company, and we asked all the men, like, how would you like to bring your babies if there's a baby facility? None of them said yes. And that's the cultural problems that you have to also overcome, right? So it's infrastructure and culture that you have to sort of tackle altogether, because in Pakistan, most of the household duties in terms of bearing and rearing a child are with the woman. So that needs to change, right? Similarly, apart from just the infrastructure, I think there are a few things that you can do. For example, in Pakistan, a lot of salary negotiations happen in bad faith, right? HR has this weird concept that if we sort of lowball a candidate and save money for the company, we've succeeded, right? Which is absolutely insane, right? In Toronto, in New York, in a lot of countries, you're not allowed to ask for your last salary. In Pakistan, all your negotiations happen based on your last salary, right? So if you've been lowballed once, you're going to be lowballed for the rest of your life, right? It's a vicious cycle that you have to get out of that can be solved by regulation. That's ethics, yes. If you're a good company operating ethically, yes. But regulation should be blanket across all companies that you shouldn't be allowed to do those things, right?
If I may interrupt, I think this is a very important point, because you'd rather have a workforce, whether you're a startup or a large company or a mid-sized company, that is not worried about day in, day out about what their true worth is as talent, because you'd rather have them use that mind space to actually contribute to the mission, vision, and goals of the company. So I would say, yes, regulation is very important, and lawsuits need to be filed after that regulation is passed. But at its core, it's about the ethics of a company as well that says, you know what, I'd rather have 40 people that are happy working for me as opposed to all 40 of them going and having chats about how they're being lowballed and then trying to find a way out because it's unproductive.
I think at the same time, tech startups right now, especially the slightly more mature ones, have a responsibility to build a bridge with the educational institutes as well. Because I think there's a massive discrepancy in a lot of educational institutes and what is actually required by the tech industry, right? A lot of the talent pool that comes out is just coming out with skills that the tech companies do not need, right? I'll give you an example. I was taking a course, teaching a course, or going to teach a course at Punjab University, and I went in with a, like this is what product management looks like and all of that, and they redid all of it and said, the students that are going to come out of here, if you can teach them that there is an institution called Tech Startups and Entrepreneurship, that will be a win, right? And that made me realize how little work has gone from the tech startup or the entrepreneurship side to sort of universities, yes, but if we take the onus on, right, to build that bridge, to sort of make sure that the talent comes out with the right expectations, with the right skill sets, to also expect these things, to also know their worth, right? And at the same time, sort of a few companies leading the way on that ethics, because I don't think that works. Like if you put the onus of ethics on the companies, I don't think that works anywhere in the world, right? There will be, like I said, 0.5%, 1%, maybe 5% doing that, respecting the talent, right? But most of them just have to be beat into it, right? So, and like I said, it's not a Pakistan-specific problem. You see that across the world, right? You're going to try and save money. So I think there's infrastructural problems we need to solve specifically for women. I think there's educational institutes linking that we need to do a little bit better. I think ethics, obviously, and regulations play a big role into all of this. And I think maybe that goes a little way into solving this problem.
I do think an interesting trend right now is, I don't know if you guys are doing this at Bykea as well, is that rather than people hiring, the trend is moving away from HR to people, right? And that's what I find really interesting, because it's a very US and Western, you see that over here, is that you never have like you have a head of people and culture in American companies, right? And Pakistan, it was always like an HR officer, which was like very tactical, like let's do the job, someone's hired, the lowballing that happens. I think the most common thing I help our companies hire for right now, and has been a head of people. And like that, finding that skill set of someone who really understands that it's less than HR, it's more the people and person as like a whole. That type of approach, I think, is becoming like a really important skill set to hire for right now.
And that in itself is tough.
It's so hard.
It's so hard finding the right head of people in Pakistan.
Yeah.
Right. Like I said, I moved into that role as growth. So I moved into that role for Bykea for a year, for 8 to 10 months, just so that we could figure out a way to restructure the company from a business perspective, to get people into the habit of, the leaders have to hire, right? The HR will help and assist and find you but the leaders need to take on the responsibility of building their teams. And I think that mindset is just very hard to find in Pakistan.
Totally.
Closing words on this question?
I have a slightly different take just from the experience I saw in other markets and from the experience that I've had in Pakistan in the last 6 years, because we've gone through a major corporate restructuring and transformation from an owner-led company to a professional-led company. And what we saw was when you brought in best practices, when you brought in transparency, we upgraded everyone at all levels. And frankly, we have to compete for talent in a very strong sector. As you know, consumer goods is a big sector in Pakistan. And we've done such a good job because of that, because of these practices that all of you are mentioning. And to relate that back to some of my other experiences in Saudi specifically and Egypt, what you saw, and it was mentioned, I think, in the earlier session this morning, is bringing competition in changes everything. So in a way, having more competition for talent improves the lifestyle of talent. Mm-hmm. We saw that in Saudi, right? A lot of big conglomerates were can hire whoever they want. They were the only people in town. The minute you saw more companies coming in, both international and local startups coming in, everything changed. They're paying more. Mm-hmm. They used to pay their CTOs nothing. Today, CTO is the highest paid guy in the entire company because he has other options. So I think when you create other optionality for talent and more competition, everybody rises. So policy can work to some degree, but I think policy that increases competition is the game changer in my opinion.
Got it. Well, with that, please join in thanking the panelists for this wonderful session.